Hi trader, this is Elite Currency. My name is Chris, and today taking a look at the euro dollar and pound dollar because of the massive movement that we saw of Friday, of course, with non-farm payroll. Let's kick off with the euro dollar. Of course, the story continues as prices moved up very strongly, a huge rally, and I think that this is the start of a new uptrend here on the euro dollar. Now, of course, price did not manage to break through 120, which is a round level. It just missed it by a bit. And when the US data arrived on Friday, we saw a bearish reaction to that, which means dollar strength. So at this moment, I think that price is making a bigger ABC. If you look at the pattern here, I think that there could be basically a wave 5 finished here, and price is now making an A. We could see a B and a C. However, I don't think that A is necessarily finished as yet. So I added the numbers and letters so you can see that a bit easier. This is the reference I was talking about, a 3, 4, 5 finished and now an ABC. But A is not finished in my view. Let's take a look at the daily chart and we'll be able to see how that looks like from close up. So this is looking, of course, at this part, this was still looking corrective, but when price really started to break above 110, 113, definitely bullish momentum, and it lasted all the way up almost to 120, as I said. Now I think, considering Friday's candle, I'll zoom in all the way to Friday, you can see pretty strong bearish candle. I think that it could be an indication that a retracement is coming, and this could be a wave 4 retracement in my view. So the month of August could be a bit slower typically on average, so a wave 4 correction might fit within that time frame as well. So what is a corrective correction? Well, basically I expect price to make a choppy up and down. Something like this. Up, down, down, up, like that. All right? I think that price could make a bull flag or a triangle pattern. I wouldn't be surprised if that happens. So what kind of fib levels might price fall to? So I put a fib on the very larger move up from this bottom to this top. This bottom is from the beginning of April. And from the most recent push up, which is around the mid-June. And that was about a 700 pip surge. So I have fibs on both. And you can see the price stopped at the 23.6 fib of the smaller fib. That could be just an initial bouncing spot. I would personally expect, although of course this is counter trend, price to make maybe a small retracement of Friday's candle, find rejection there, and then fall down to 116, which is the 38.2 fib of the smaller fib and the 23.6 fib of the bigger fib. So if we look at the confluence right between fibs, let me stretch this out so you can see that a bit better. There we go. Where is the confluence between these two fibs? Sorry, there we go. That is at 116. It is at 114 as well, the 38 and the 61.8 fib. Plus 115 is around level. So I would expect somewhere in this zone, I think that price could retrace back to the zone by the end of this month, perhaps, right? About 20 days of candles going back like this, then bouncing up September like this, hooking back and continuing in the fall for one more euro dollar upside. Now this is a very long term, well not very long, but this is a medium term analysis, and of course this could be updated as we go along. These things are more vulnerable to changes, but this is my current view of the euro dollar. Once it makes that higher high though, somewhere in the fall, I expect price to find a rejection, maybe at 122.50 for instance, and make a 3-wave down again to make wave B, but that's way down the line, so no sense talking about that now. For the moment, I'm expecting price, therefore, to find this downside. I would change that. It is possible that price, of course, could continue with the uptrend, but I would probably need to see price in a strong daily candle. For the moment, I'm definitely bearish. What I would need to see is I would probably need to see a strong bullish candle all of a sudden like this, and this is a doji, for instance, like that. Then I would be on hold, and I would definitely take a look at if price is able to break through this high. If it does, I would change my view. So it would need to be a bullish candle on the daily chart and a break above 119 really for me to change this reversal kind of idea that I have. The trend is up, but I think that this is a reversal territory. When looking at the 4-hour and 1-hour chart, you might see why. So for the moment, I think that price could make a small little retracement like this, perhaps go back to a fib. If we put it on the 1-hour chart like this, perhaps to the 50 fib, the 61.8 fib, kind of a choppy formation like this, either a rising wedge or a bear flag. Break that flag and continue with this downtrend. And there should be, I think, some good moves up again. I don't think this is going to be straightforward down. I think there are going to be lots of ups and downs, but ultimately, if that happens, we'll get some kind of channel like this. We can connect these tops and bottoms, and price could stay within this channel like that, and then move down, and then like that, and then move like down like this. So there could be this bearish angle of the trend channel here, but with a lot of ups and downs, a lot of momentum ups and downs. All right, so that's about it, I think, at this moment. There is divergence between these tops. So I would say a conventional or conservative target is the long-term moving average, which is the target when there's divergence present on a 1 hour or 4 hour, especially 4 hour chart. And you can see the minus 61.8 target as well. So, it might not go all the way that deep, but I think 116 is a very decent level to expect for this correction on the euro dollar, considering also the 4 hour divergence. Let's take a look at the pound dollar. Basically, pretty much the same situation, I would say. You can see that the pound, strong bearish candle already on Thursday with the Bank of England statement and the decision. Then Friday again. So this is looking like it's breaking, the pattern here. It actually broke this particular pattern to the upside. But if you start connecting these tops, there was another rising wedge actually. So there were two rising wedges. One was broken. This one to the upside, the other one is broken to the downside. So from this perspective, I think there's a good chance of momentum to continue. This is good bearish momentum, and I think that looking at the hourly, you can see pretty much just straightforward down. And I think that we should see continuation. If we take a look at the weekly candle quickly, very bearish candle. So we might see some retracement of that bearish candle, but ultimately I would expect a continuation this week. What could be a good trade to expect? Probably putting a fib from the top to bottom here on the 4 hour chart or 1 hour chart. I think it's pretty much the same, right? And looking for a retracement, I think the 50 fib, it could be any of these fibs, to be honest, but where's the strong confluence? Probably the 50. If you look at the 30-minute chart, there is, let's see, 15. Let me take a look at the 15 then. Let's see, this seems to be, those charts are frozen somehow. It doesn't matter. So let's take a look at the hourly chart. And you can see basically that price is, maybe finishing 5 waves. All right, that's my point basically. So there could be an ABC, for instance, towards the 50 fib and this kind of sideways zone and the moving averages, which I think could be a bouncing spot. So that's basically my view. Please go to elitecurrency.com for our free starting package. A lot of good material. Just click on download now with ECS Start. That's for free. And if you like this video, please share, like, and subscribe. Wish you all great trading. Cheers.